The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Let's check out where the markets are at right now. We got the S&P is currently up about 7 points right now. We got the Russell up 11. The Nadex up nearly 17 points in the Dow, and the Dow's up 31. Copper is up about 0.5% right now, as well as gold. Soybeans up a little over 0.5%. So the metals, doing just a average move, nothing that major there. Looking on over at natural gas, it is down 2.3% on oil inventory day. Natural gas inventory day. We'll pull that one up and we'll look at it here in a moment. We got oil is currently pretty flat on the day, just down 19 cents compared to yesterday's settlement. Corn is basically unchanged. We got about 11 points in soybeans. I prefer soybeans usually over corn. This moves a little bit more. And then looking on over at euro dollar. And it's just basically the way the price is built and everything else. But looking at euro dollar, we got a move right now of, let's see, my numbers were misaligned there. Down 35 pips. We got the Aussie dollar also down 35 pips. A pound dollar down 49. Looking on over at the dollar franc, it is currently up 12 pips. So the dollar CAD is currently up just a mere, dollar franc's up 12, but the dollar CAD down 17. Looking over at some yen-based pairs, we got the U.S. yen is up 47, the Aussie yen is up 4, Euro yen is up 21, pound yen up 18, and the Euro pound is up 4 pips on the day. All right, well, that gives us our current market watch, lets us know where everything's sitting at. Now let's go ahead and look over some of the news we were talking about there. We had some news last night that we can check out. We also have, natural gas inventories and all that. We can go through to sort of walk through those, how they work. And, just hopefully you can pick up a few tips and tricks along the way. Okay, so pulling up my plan that I discussed here with you yesterday on the show. And let me I'll pull up Forex Factory. We can talk through some of these and just do it step by step. Hopefully you're, sort of learning how to do these news trades and, put them together. And what I got on here... Let's see, I'm going to drop that off, move this over. All right, moving a few things on my other screens here to make it easier. Pretty busy day. We had the PMI come out on the euro dollar. Not really a consistent number there, so not one that we're just, always hopping in on. But let me open up a chart. We'll just start flipping through some of these. And we'll go euro dollar, pound dollar, dollar CAD. Check them all out here. See how they responded to the different news reports. And let's see here. I'll just pull up 5-minute bars to make it easy for the news there. And let me go ahead and load up I'll probably load up magnet pricing, so I might look at 10 on this to see if we see anything along the way. And let me break this down. I always like to look at default 24/7. You got different session templates you can use. I always want to use the one that's going to give me all the data. Makes it easier to see everything. And where is that? I do have it set to default 24/7. Okay. I thought I had it set there. Okay, let me do it one more time. And that should work for me. Okay. So bringing this on over. And like I said, we had the PMI report come out. A few different ones. We had the French one, the German one, and the European one, 3, 330, and 4. And so let's go ahead and look at euro dollar for that one. And once that's loaded up, we can walk through it. And you can see sort of where the slew of different PMI reports are coming out. And right here, the first one comes out at 3 o'clock. We get a move down. Actually a pretty decent move, about 24 pips. That's actually pretty big for the French PMI. Then right here at 330. And there we go. Right there at 330, we get a move low to high. Not a massive move, but low to high, pop off that pretty much. Looks like about 30 pips. And then when the European PMI comes out right there at 4 o'clock, sort of the news movement on that, about 15 pips or so. And so giving us a high to a low of about 36. So like I said, not really a trade that I usually hop in on. If you could find if you could find maybe a good iron condor early on, but it just wasn't one that I really had the stats on because it's not significant enough to put all the pieces together. And so we get rid of that. And now let's go ahead and roll on over to the second estimate GDP. Can be a big mover, and it's almost about 50-50, which I don't like 50-50 trades. My only thing is that 10 out of 12 times they usually move this far, or they don't move this far, that type of thing. And so high to low, 7 a.m., we got 56 pips. And so, I mean, would have worked out to be a great trade. Just it was one of the, half the time it would and half the time it wouldn't. From when you got in, if you would have got in at midnight to really compare it to the actual trade, if you would have got in right around midnight and held the thing to 7 o'clock, you probably would have been paying about 35 or 40, maybe 50 dollars total for a straddle. So you would have lost on the straddle because it popped up and popped back down. You would have made about 25 bucks on an iron condor if you could have got about 50 bucks on that or 45 bucks on that. So it depends on what the pricing was. But again, it's not consistent enough. I'm looking for that consistency. And that one was, in this case, flat. So next one will probably be a 70 pip move. Let's go ahead and look over here. And let's see. We got CAD retail sells. See where the dollar CAD is sitting at right now. And what our news plan is on that. And since this one's still going, we can actually look at it a little bit more in detail. But if we go in here and you entered this morning, okay, so if you got in at 7 o'clock, okay, you had a couple choices, but one of them was enter basically right at 7, and then we'll take that to the current price. We're currently 8 pips off of that. If we took that right at 7 to the high, it's moved up about 24. It's moved down about 25, so it's had about a 50 pip move high to low. We were looking for a $40 or more profit, ideally on the trade. And the other option was to do an iron condor from 8 to 10. So 8, and then we take that to 10 o'clock. Looking for about $35 on that. Only 2 pips off. So if you got a fill on that, you definitely made money. We can go in and we'll pull up inside the Nadex platform. What we'll do is, let me open this up and we'll check out the dollar CAD spreads, okay, and sort of map this trade out for you for an iron condor. So if I go in here and I look at the forex spreads, we got dollar CAD, we got the 3 p.m.s that started at 7 a.m. all right. And the reason I'm opening it up in the platform versus the scanner right now, I just want to pull the charts up. We're going to add that feature in the next couple months where you can pull the charts directly from it. But so now let's just verify that it's at about the same price. Yeah, we're right about 1.0905 or so. So we're right on the line there. And 0910, so that'll work. And we're going to open up this quick chart. And we'll pop that out of the window. Okay, and then we're going to go down here. We're going to open up the lower quick chart, and we're going to pop that out of the window as well. So now I can get rid of the platform. I don't need it anymore. And then we can look at, what was pricing, if it's available. So they don't always have it in there, so we're trying to see if we can find some pricing on it. And it's going back to 11. I needed a 7. Okay, I do have the right ones. Yep. Okay, let me try the demo. I actually have a program right now, which I'm pretty excited about. We just got to turn it on, but we're recording all of the data. So that way we can pull up historical charts on everything. And we already I have the display models made, the data's made, now we just got to connect the dots, put the pieces together. Let me try that again. I'm going to try it over here and just see if maybe out of demos working. There has been some weird little things I've seen on some of those charts. You don't usually use those charts. You want to be using real underlying charts for trading. But when trying to look back at something, it can obviously be very helpful. And let me see if this is giving me the data far enough back or not. Yeah, it looks like there's some. Let me maybe a larger time frame. I wonder if that would help. No, it's just making... Oh, wait a minute. There we go. That actually might work over here, too. Let me try it. I don't know why it worked, but if it works, it works. I went over here, and I made the time frame bigger. So let's go to, like, say, 30 minutes. Let's try 15. 10. I see at 10, that's like where the glitch is or something. So like 15. All right, 30. There we go. Okay, well, that'll work. And then we just tighten this thing on up. What I do is I like drag it left and right. And that'll give me right there. There's the 7 o'clock to 7:30 pricing. So just had to massage it a little bit. And let's see here. See if we can get this to work on the 30 minutes over here the same way. There we go. Awesome. Okay, so we can get it. We can put it together. So, with that in mind, now that we got the spread right here, this would be the upper spread. This would be the lower spread. And obviously this is not going to be perfect, but just to give an idea, just looking at just the open price here, 1.09, so that's only 10 ticks. All right, and going over here, looking at it's 10 ticks off, okay? And then looking right here, 1.092. Man, talk about really low, cheap spreads for end of day. That's an end of day spread. So 1.09, 1.092 at the open, which again is only 10 ticks off. So you're talking a $20 straddle, probably actually about probably about a $30 straddle. And probably a little less than that actually for a condor, less than $20 with your your bid and ask. 'Cause I think it's stuck right now, quoting at mid. Yeah. So just understanding what the bid ask spread is. So yeah, that trade really. I mean, it would have been a great trade if we could have got the fill in the price. There just was no premium in the trade. And why is there no premium? And I've talked about this a few times over, but just to sort of highlight it for you again. This is one of the things you love about following markets, especially if you're an option trader, is you love high volatility. Right now we're at extremely low volatility, and it keeps going lower. Let me go back and let's look at a little larger time frame here and show you. I mean, we're almost at about 11.68, the low over the last, looks like 5 years, like 11.05. So we're about at the lowest extreme on the VIX we've had in a long time. Stay right there. We'll be right back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So I was looking at a few things, and I'm constantly just watching this, trying to see, what patterns we can see. One is this is the second lowest we've been since last March. Where the low before that was back in October of 2007. I guess if I back this on up a little bit, we'll go in and let me pull up a little more history. I don't want days, I want weeks. It'll be way too much information on days. Let's go back on here to weeks. So we see back right there, we're getting that, back, late, 2007. Before everything turned around. I'm not saying that we're going there right now. I mean, we got here back in March. We haven't quite broke that low yet. When we did get to that point in March of last year, the market had a drop, and then it rose for the rest of the year. So, I mean, could that keep happening? Yeah, it doesn't necessarily give you a great indication right now of direction. The one pattern I do see, okay, and, you can sort of follow along to sort of look at this. I mean, it does, you can use the seasonality now when there's going to be spikes. But also just zooming in on it a little bit, and these are weeks, okay? So I'm looking at a weekly time frame. But you can see sort of this, consistent just dip about equalized apart right there. But it's pretty much once a quarter. So you can basically almost every few months, you have like the spike right here. It's in September. And, I mean, you sort of had a mini one right there somewhere between March and April. Got another, what I guess you could call a bigger spike right there in July or June. Spikes back up there in late September, early October. and then spikes back up again in January. Haven't really got a massive spike yet. So when these spikes do happen, that's when you're usually looking for a pullback. It does not mean a crash, okay? So just hear me out on that. I'm not in here like going, oh, there's going to crash. Does not mean a crash, but usually you get that spike right there, and you see, we had a drop, and that led to a pretty significant drop. It's about an 80-point drop over a few weeks in the S&P. So on that last spike. So we're due, I guess you could say we're due, for another significant pullback. What will feel significant anyway. Doesn't mean the market won't make it back up in 2 weeks, but easily set up for a pullback. I mean, the VIX is just extremely, incredibly low, so no fear exists. Once that VIX does come back in, that's when now it's great if you're an option buyer or seller, or buyer. Buyer puts, buyer calls, buyer of spreads, buyer of out of the money binaries, etc. Makes them really cheap. But if you're a seller, it makes it a little more difficult to get that premium in. So you'll notice, if you watch the VIX, you'll notice when it'll be easier as it spikes up a little bit. I'm not talking about the big spikes every 3 months. I mean, when it just actually moves up, it's up to like 15 or higher. It's a lot easier to get that premium that you want. And so just that's why it may seem sometimes when you use certain strategies that like this is going really well, and then what happened? Was my strategy broken? It's like, well, the volatility's changed, so now your strikes may be closer, your premium may not be as high. So just learning how to understand implied volatility, watching volume to help you really time those entries. You got to be a little bit more specific, using your volume to be more spot on when the market has lower volatility, because you're not getting as much premium, or you're not getting them as far away. Whereas you have a little more wiggle room when you have more implied volatility. That also usually means the market will move a little faster. Okay, so there's that balance to it. But at least you do get the distance, and you get a little more money in the process. All right, so that's a simple lesson there. But look at the dollar CAD. Great trade setup. Worked out exactly as called. Only issue, there really just was not enough premium to pull the trade off. All right, so what else do we got? And it's one of those things you set your trade up, you wait for it, you look at it, you find everything that's there, and if it lines up, you take it, you strike, and that's really important. You got to have that patience, you got that discipline. Don't force it. But if it's there, then you take it, you act on it, and if it's not there, you're okay with that, and you go find the next trade. And that's why I like having a variety of plays in my playbook, because it allows me to be more. It's a little easier to be patient when you have more things that you can do. Okay, if you can only kick the ball, it makes it a little difficult. You're the kicker trying to come on, let me in, let me kick, right? But if you also have a quarterback play, where he's running the ball, he's throwing the ball, and you got all these different plays you can do, then you can trade in a variety of market styles. And so, I'll trade, whenever we got a lower implied volatility, I'm going to be doing like out-of-the-money momentum scalps. I'm going to be doing all sorts of stuff like that. And just doing short, quick trades. Also do nice, smoother trend trades. You can get some really good setups on some of those when the market's trending really smooth. So you want to have that variety. We'll check out the employment claims, and I think the biggest request I got from several people today was check out natural gas. So we'll look at that as well when we get back after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. So, again, a really low volume day so far. On expectations, it's really not a whole lot going on, but the markets just decided to trend up nice and steady and then chill out right around 11:30 there, where they being the guys who drove it up, the big boys, dumped off their shares and let go of everything. That can be seen in a bit of a spike comparison. Not quite a volume spike, how I define it, but you see a spike right here in the volume happening after, volume was high in the morning. Of course, that's normal. And then volume declines, also normal. But then when you see that massive spike, that's usually like get ready for flat markets. So it may trend a little bit up, trend a little bit down, but there'll be flat markets until you start seeing volume pick back up in the market. And so that's your clue for a flat market. That could also be your clue for going in and doing butterflies or maybe iron condors, things like that for an hour or two. And this is visible on S&P. It's even usually more visible. We'll see if it is right now. So I haven't looked, but we'll check it out just for this specific analysis. Over on the Russell, and usually I can see it on the Russell pretty easily. I mean, I'll see like one obvious spike somewhere, usually between 11 and 12 Eastern time there. So you can see right there, there's the spike, and the market just sort of goes flat and chops. And that's where it's good to also know, expected ranges. So, if I go in here and throw on some expected ranges, there we go. Then that'll sort of give me an idea of how far I expect the market to move over an hour. And so let me know, where to put that in. So I see that spike happen. Boom. All right. So to end of hour, to next hour, and I can adjust them out, make them 2-3 hours long, things like that. If we go back, previous day, see a lot higher volume. This is a bigger volume day. Let me compare that to today. And you'll notice how we have a lot of, in the morning we had some nice volume. We had about an hour right there, but then just beyond that, nothing happening. So very low volume day for at least those hours, the specific hours. And if I go back over here and look at, let's see, let's make sure, yesterday, I wanted to make sure. We're exceeding volume on a consistent basis. I'm not going to be looking for a really flat market until I start seeing volume go under. And so we start getting volume under, and then it picks back up. But again, volume stays under. Notice when that volume really drops underneath the expectations, things really just chill out. That's on a 5-minute. If I look at a 10 and a 15, I can really see volume dropping under expectations. Actually, almost all morning it was staying under it. But 5 is going to be a lot more sensitive, or 4 is actually my preferred setting. I love 4-minute volume. I don't know why. 4-minute prices, 4-minute volumes just seems to be just fast enough, but not too fast. So, but looking on over here, like this day, okay, we had a lot of volume. And so just using that volume, laying all that out, that can help you out a lot in your trading when you're putting these strategies together, when you're looking for neutral trades, looking for what to expect. Look at this, just flat, flat, flat. And that's like right around 11. There's your spike, okay? And then just flat. So, if you see that volume pick up, you may start to get a little nervous. But beyond that, here's another day. We go in, just go day after day, and you'll see, you may not see the spike. If you don't see it, if it's not clear, you don't force it, okay? It needs to be very, very clear to you. But, especially if you can see it on multiple time frames, you can see like that, volume just not exceeding again and again and again. That's when to start kicking in your neutral trading strategies. So, I call them like phase 2 on a boomerang, or you can call, basically it's like when the boomerang comes back to you. So, and that's basically just taking little scalps over and over again inside the market. See, pretty high volume day. We've got sort of our spike right there, but still like everything's staying above expectations. And so I'm going to look for those days on my neutral trades. Well, what plays do I want to make? And that's where all this is going. What play do you want to take? And reading volume helps you know which play to pull out of the playbook and use on your trades. All right, so what else do we have? What do we have coming up? The one other trade I wanted to pull up, we wanted to talk about was natural gas. This is really the main one. We can look at euro to dollar, but with the low volatility, I'm sure it pretty much came out the same way. But I'll be happy to pull it up real quick since I mentioned it. Might as well look at it. And here we go. Euro dollar. If you hopped in on that one, it's going to make me change up some stuff. Let's see here. And, all right. Need to get all those defaults set in there. Whenever I reset my database sometimes, and you have to reset a few instrument settings. Well, really flat. Look at that. It's not hitting volume at all. By the way, I use futures. Well, I use like 6E volume, even when I'm looking at spot dollar. Look at 6J for dollar yen, 6A for Aussie. So you want to make sure you're using actual futures volume, even as a spot forex trader. That's why I hate, by the way, MetaTrader 4, because you can't get that futures volume in there, or at least most brokers don't provide it. So it may be available through a few, but most brokers don't provide it, and then therefore people who use it don't know about it, and they teach it, and they teach it incorrectly, or they don't teach it at all, and then FX traders don't know. Yes, you should be looking at volume. All right, so 26 pips, so it's staying well within its range. Not surprised, especially with the low volume we're seeing today. Let's go ahead and check out natural gas. Okay, we'll pull that one up, and then we'll see if we got anything else left we need to cover on the week here. And, all right, we'll give that 1 second. And I'm looking for, so we had the unemployment claims, we had existing home sales, it sort of all ties together. We got natural gas. Okay, so natural gas, there's our move. Okay, spikes up, down, boom, done. All right, that's it. It's over. It trades till 2:30. So you can go in and you can look at it, and we can do sort of the same thing we did earlier. And you can pull up the natural gas spread. So let me just grab the charts out of here for you, and I'll bring them up on the screen. We'll look at the 230s. You can look at longer ones if you want to. You're just going to get more out of it. Basically, you're going to get, well, I'll explain it as I bring it up. So 4,500. So coming right in, let's see. There was the 12 to 2s. Yeah, that's not going to do any good considering I was after the fact. So let me pull these up here. All right, so tear it off. Open up the chart there. And popping that on out. And then, oh, that's a lot of information. Let's see here. Maybe stuck. Yeah, it's stuck. Okay. Let me go over. We try demo out, see if I can get it out of there better. And like I said, that's why I'm building my own. So I don't have to worry about this. And that's why I use the scanner. Because it makes life a lot easier to trade. And soon we'll have those charts building directly in the scanner. Okay, so there we go. All right, loading up the spreads on natural gas. And I was not able to have the advantage to take advantage of this today, but I still would like to go over it with you. So that way, if you were looking at it or demoing it or trying to figure it out, then you'll have that, you'll at least be able to learn from it. And just see, what was the pricing and what would have been the risk, what would have been the reward, etc. Okay. So we have 45.1, so we're buying this one, selling this one. Okay. If we sold this, we'll just say we sold, if you sold it, let's just say on the open, for the fun of it here. And there we go. All right, so right here we go. The opening price there, we get a 45.26. That's 26 pips there. And we go on down, and let's say you bought this one, and at 44.66, that's 44. So 26 plus 44 is going to equal 70 pips. Okay, so not necessarily 70 pips or ticks, but I'm just 0.070. All right. So 0.070, which would be 76 on Nadex. But so let's measure one. Let's just measure this right here. Go. What was this movement? Okay, that's 147. Now that's high to low. Now let's measure where I would have been profitable. I would have had on the upper one. Like I said, we would have made. Make sure I don't have these backwards. All right, on the upper one, when that opened up, my profit on that would be 45.26, so 26 pips of profit. That would cover me down to, so 26 minus 44.66, that'd take me down to 44.56, 46.40, so 44.4. So that only would have covered you down to here. Now this is 7 a.m., okay? So 44.4, that's your break-even point. Now this is if you got in again at 7. So we could have got in at a different time. We probably would have got in at a different time. But that'd be a break-even if you got in at 7 o'clock. Usually I don't even suggest getting these at 7. I'm looking at like maybe an hour before. So, but at 7 o'clock, that would have been the price you're looking at. And then since you got about 60 below that, at 44.4, that puts you down to a 1-to-1 at 34.380. So right about here, you'd be 1-to-1, if that's if you start at 7. Now, what would happen if we started 30 minutes before the natural gas storage release? Okay, 30 minutes before the release would be 10 a.m. So now let's look at the price as of 10 a.m. Okay, so we go over here, and our open is 44.33, which means that I have 67 pips, okay, in my favor. Remember, applied volatility is coming in, the report's about to come out. Okay, so I got 67 pips in my favor. And then if we go over here, and we go to, this bar's closing at 1. I want to make sure I got the right bar here that it's lined up. Okay. So yes, it's basically showing the start of the bar. So I actually need to look at some bars on different platforms. It's one thing to always be aware of. You got to remember it. Is like these bars show when the bar starts. like a Ninja Trader shows when the bar ends. So to make sure you're lining stuff up the same, you want to make sure you look at the right one. So like 10 a.m. here really means 10 to 10:30, whereas on Ninja Trader, 10 a.m. means, like on a 30-minute bar, would mean 9:30 to 10. So I could use the opening price on this because that's right at 10 o'clock. That still would work okay for me. But I just want to make sure I don't look at like the closing price or something and think that's a close at 10 a.m. So I'm still right, 67 pips, okay, right there. And then if we go to, again, the open of 10 a.m., barely anything. It's already at, let's see here, 45 to 49. Really not anything there. No premium to be made. And so 45, I mean, it's like 6 pips away. So really not a good trade setup 30 minutes before. And it's just because it already dropped down so much. It was down at the floor. It was below the floor. And so people get really confused on that. If you look over here, and if the market started, up here at 4,500, but by 10 a.m. it's down here at 44, 43, there's not going to be a whole lot for you. So with that movement, there's no way you could have used the end-of-day contracts. You would have had to use the contract that happened and basically started at 9 and went to 11 would really be the contracts you would have had to choose. Now, you could have got in, at 9 o'clock, or you could have got in at, 10 o'clock for an expiration at 11 to see if you could have taken advantage of some implied volatility and to see if it was too cheap or too expensive, either way. So if I go over here and I look at this and I go, well, was it cheap or was it expensive? Then I can go, well, what's the expected high to low? Well, if my expected high to low is, 0.120, and I got a little more than that. Let's see here, pretty much spot on, but if I go just a high to the low after the release, at 0.151, so, a few more ticks, like half a dozen more there, ticks on natural gas. So pretty right within line of the expectation, just a little bit over. That's that green bar right there, just a little bit over what we're looking at. And that helps me understand, okay, so this is my expectation. That is going to help me determine one of three things. One, hey, I can get a spread for that much or wider. That's a good trade, okay? Because if my premium that I can bring in is equal to the expected move, well, usually the expected move happens and then it pulls back. Okay, like majority of the time that's what you're looking at. That's why it's an expected move. But pulls back. So if I can get that wide, then if it does move a little bit further, unless it's like double or triple the expected move, then it really isn't going to hit me that hard. But if it pulls back at all, then I have profit there. Or if it's just dirt cheap and there's no premium in because the VIX is really low type scenario, I might go, well, wow, what could I make? Maybe I can buy the thing where this is my, my risk scenario right here, but if it goes outside of that, I'm making money. And to see if is there a good profit scenario where I could actually put a straddle on and take profit at the expected move from where the market is at the beginning of that hour to, the high or low. And I don't have to go in and take the profit at the high or at the low. As it moves, I can take that profit off. So if it moves up 20 and down 80, and that's my expected move is 80 high to low, well then that's where I would take off profit. All right, stay right there. We'll be back and we'll look at tomorrow and see what's coming up.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so looking at sort of what's left on the calendar and how we can put it together and maybe make it an actual usable news plan. The dollar CAD has actually had some decent volatility over the past couple of years, but it's really slowed down a lot in the past 12 months. Has a very low percentage, like 25% of the time over the last couple of years even, hasn't even hit 50 pips. When it does move, it can move pretty big, but it's again, it's a rarity. So for the Canadian CPI report, I'm going to be looking at a dollar CAD. That's going to be tomorrow morning, and the report's going to come out right over here. Let's see here. We can drop that down and zoom it in a little bit for you. So right there, for the core CPI coming out tomorrow, the CPI, core CPI, at 8:30 in the morning. Then we're going to be looking over here and checking out a few things, but the one trade I'm going to be looking at is I'm going to look for a $30 iron condor, literally $30. And we have 16 pips, 10 pips, and that's definitely for the 11. Let's see, we've got 8:30, so we're going to have 10 o'clock. Does that work for 10? Let me see. Let me check out 3 o'clock also, because that can help a lot if we can pull it off as often. Let's see here. I'd actually use the same rule whether I was using 10 a.m. or 3 p.m. So I'm looking over all the stats for the last 12 months specifically. And there's one time when he lost like $20. See, another time about $20, and the other times you would have been profitable on the trade. So if you could bring in $30 in premium. So if you're looking for $30, because often it's taking like 5 or 10 ticks, okay? And I'm talking about beginning to end. Now, it may have a little volatility in there. It may swing down 30 or 40, so don't be surprised when that happens, okay? But looking for about a 30-tick, total profit, upper and lower combined, for the core CPI for 8.30 on the dollar CAD. What about new home sales? Let's see if I see anything on that. And we'll look at euro dollar. I want to see if there's anything else that might even give us a little bit more, but I think euro dollar is going to be it. And yep, we're going to land on euro dollar here. You could also repeat this on probably a couple other pairs like Aussie dollar as well. But and it's Friday. But let's see if there's anything. I want to see if on the euro dollar, on the new home sales, like end of day versus, like 10 o'clock. And what we got. And don't forget, you can do binaries on these if you want to. I mean, we have this high to low expected range. So the thing is, when I'm doing 30 pips on a spread, I'm break even if it moves up 30 pips or down 30 pips. That's a lot harder to pull off on a binary. Okay? So you could use that dollar amount, and if I say, maximum profit 30 pips, then that basically what I'm saying is, hey, if it moves up or down 30, so you could use a strike up or down 30. Just remember, if it moves up 31 on a spread, you lost $1. On the binary, you lost, whatever amount you brought in on at least one side with the profit on the other. So, and remember, I'm not getting out of these. I'm letting these things do. I'll get them for profit, but I'm not getting them for loss. I'm letting them do their thing. I'm letting premium collection work, and because the risk is capped, and it's not all or nothing. It's adjusted risk. It's variable risk, meaning every pip or tick is $1. So that's why I like the spreads on them. But you could play with binaries. You could check them out. Okay, euro dollar. Looks like we got over the course of this entire thing here. Let's see, 10 pips, 30 pips, 13 pips, and 14, 12. I'm going to go for the same trade, the exact same trade, but on euro dollar. 30 pips, 10 a.m., not 10 a.m., sorry, 11 a.m., or 3 p.m. getting in at 7. So both of them, the 10 a.m.s get in at 8, the 3 p.m.s get in at 7, 30 pip profit between both sides. Y'all have a great day. I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.